Morning, everyone. Yeah, it's been a good weekend. I've had time to interact with so many people about so many things, especially in the markets. Yeah, so the financial markets have really they've really expanded so much. There is so much happening in the world that that gets the attention of literally everyone. You know, there are these companies all over the world that advertise their robots, they advertise their kinds of investment strategies, and yeah, so many people have been attracted by all these companies and all these services that are out there, and they promise some good money. They promise you some good returns on a daily basis. And for a country like Uganda, these returns are really nice. Yeah, if they're promising you about $50 every day, that's about 170K every day, or 150K on the minimum. In about 5 days, that's a lot of money. That's almost 750K. That's a lot of money, and that's a promise coming from these companies that have very nice advertising strategies there. So they are nice. They're literally nice. And not only that, there is also a lot of the right word is these people who give testimonies. That's the word. So these companies, not only do they have good advertising, not only do they promise very nice returns, but they also have testimonies. There are people who testify that they've become rich, because of what those companies do. Yeah, and yeah, somehow, somewhere, I'm the one who receives all the phone calls. Is this company legit? Is this company nice? Does this one work? Yeah, so I just for the sake of people who call, I do some research. And sometimes the truth is, many of these companies actually, they really want to do the best for you. But sometimes some companies might have weak strategies, which don't really work on the market. They might have a very small strategy that might work maybe for a week, and they will advertise it. So it's easier to advertise and do all these other things, but presenting a working strategy, that's where the challenge comes. Yeah, so some people might speak and speak many boastful words, that this and this and this can make for you a lot of money and what. But yeah, you have to put the convincing aside. If someone is really trying so much to convince you, then there could be it's a 50-50 chance. So if you look at what has been happening over so many years here in Uganda, so many companies have come up and they've disappeared because of the strength of the strategy. I always say that trust in the math or the science of whatever strategy you're using. Do not trust in your confidence. Do not trust in how you feel. You might feel that this is what works. You might be convinced. You might be very confident, but the system has to work. It must actually work, and that is a system you must that you must trust. So whatever company is there, they must present to you a system and show you how it works. Yeah. So every time, like when I started making these robots, I think even on this program, for some time, I would show you exactly how why the robot was made, the parameters under which it was made, and how powerful these parameters are. And I normally do a test over 1 year to show you that the market keeps on changing. Every time. Sometimes you have a flow of the market in about 3 months, then it changes into another flow where certain strategies might not work. So every time I am making these robots, I always give it 1 year or 2 years, a testing period, to show you how it maneuvered in all those markets, how much profit you should expect from this robot based on its entry points. And yeah, so that is how you see if a system works. You check it out, and If it's a robot, robots are very consistent. They don't change their minds. You might say that, like the way human beings trade, you might trade and your trades are based on some kind of, let's say, price action or divergence. And if you put that system into a robot, if you put divergence into the robot, it will follow that system irrespective of everything else that is working in the market at the time. So you might open your trades when the price hits a certain resistance and breaks it. That's when you buy. Now, when that happens with a robot, it will always buy at that point. But if you're the one trading manually and it breaks a certain resistance, you might not buy because there's something else happening. You look at the price action, you will look at so many other factors, and you will determine if this is the right time to buy or not. So having a robot that, irrespective of so many other circumstances, it will keep on buying, doing the same thing over and over and over again, and succeed for a year, then that's a good robot. That's a good testing period. And if you make profits for a year, non-stop, you're guaranteed to have a lot more money than you are really expecting, because the market is relentless when it's taking your money. At the same time, when it's giving you money, you can even sometimes switch off the robot and say, you know what, I think there are times when enough is enough. So sometimes there is enough money. Sometimes you might look at the money you're getting and you say, you know what, enough is enough. I'm switching this thing off. This is enough for me. And it's a funny thing, but I can guarantee that can be the best decision you can ever make in your life. If you tell someone that is enough money, I don't want any more. That is the best decision you can make. You don't know how having certain amounts of money can just destroy your life. Some monster comes out of you and you start living, you become like, I don't know if you watch Spider-Man, there's that guy who has two characters within himself. You become like that. You don't want to go somewhere, but because you have money, you go. You go there, you regret and all that. But anyway, that is something that is, it's best when experienced. It's good to experience something like that. Then, you will come down and know that, you know what, sometimes enough is enough. But anyway, testing a certain strategy, and if all these companies show you their strategy and they tell you this is how we do it, so many companies are very transparent. They show you everything. Others will just tell you that you're going to earn this money for the rest of your life. And sometimes, depends on how greedy you also are, you will just fall into that trap. So it's been good talking to so many people. Many people who watch this program and you call me. It's really nice. We talk, and sometimes I figure out things that I didn't originally even think about. Because people mention some crazy things, some crazy possibilities. But it's it's all good. It's a learning process, and sometimes when people are on a trail that I was on some many years ago, when you start trading Forex, there are so many things you go for, and sometimes you keep quiet. Whenever you have a lot of expectation, you just keep quiet and keep it to yourself so that you make that load of money on your own. You make a very, very big amount of money on your own. And sometimes, the first time you try that time is when you get hit. And, you get disappointed alone. But I think because of, it's not really something that is frowned on a lot these days, trading Forex. Some people are still frowning over it because, just don't understand what it is. But people these days ask questions. They really ask questions. Someone calls me and says, you know what, I want to start with $5, and I want, by the end of the week, to have about $2,000. So that is something serious. So that person needs a reality call, a reality check. And, you talk to them and tell them, you know what, $5, you can't reach $2,000 because of A, B, C, D. You do the whole math, you do everything, and you tell that person, you know what, now you know the reality, you know what's going to happen if you take such a risk. But if you're still willing to go ahead with the original plan, with all this information that you have, that is very okay. It helps you not to expect, something that is sort of assured. Because you might have it in your mind that, at the moment I put this money, I'm going to make a lot of money. Yeah? And, it might be like about $100. Yeah? Some people work so hard to make that amount of money. Like $100, that's about 370K or 350K or 360K. Yeah? So you'll find that someone is going to work so hard doing all this manual labor, doing so many things, moving from the corner of the country to the other corner and whatever, and saving small bits of money along the way. And then they come up with $100. They've really worked and sweated for that money. And the first time they put it into the market, it's taken. Yeah, it's taken, and there's a lot of sadness, a lot of, things become very rough. So, in order to avoid that, you need proper risk management. The emotional bit of Forex is not only for fear and disappointment and what, it also works well with excitement. So, excitement and too much expectation can be very bad for traders. You might collect your $1,000 and you decide that, on 1K, I can make about maybe $100 maximum every day, which is possible. So, you start, then someone talks to you and tells you, you can make $1,000 every day. If you have 1K, you can make 1K, and then you take that path, and you lose your 1K like that. Because the risk you will have put in will be so much. It's risky enough that you want to make 10% every day on your $1,000. Now you want to make 100% every day with your, with your $1,000. Which multiplies your risk by so much, especially because the market is not constant. It's very, very fluid, extremely fluid, and the more flexible the market becomes, the more flexible your head also becomes when you're looking at it. Like that magic spiral thing that you look at, and it also makes you a bit dizzy. That's how the market is. The changing patterns in the market, as too much, your brain may not keep up with them. You're going to try to look for the same thing in this market when the market has changed. It's on a totally other level. So, so having too much expectation, expecting too much from the market, from a very small investment, is a very big risk, as I've told many people, because, they look at all these companies that promise that, you can invest little money and you'll make so much money. It's really tough, It's really, really tough, I think last year when we started this Telegram group, the majority of the people, there are so many surveys that were carried on, and the majority of the people say that they have $10 to run their accounts. They have only $10 and what and all that. So after having very many long conversations, I decided that, let's see what $10 can do. Let us see how we can grow $10 from a small amount of money to a relatively big amount of money. And it was the toughest thing. It was very, very tough. So one way of doing it manually is really tough, because whatever risk you use, $10 is quite a small amount of money, and you can lose so much when you're trying to trade it. So I decided to design a robot. I think I called it Braveheart. Braveheart, because you have to be really brave, it's like going to war. Every time you enter the market, it's like you're going to war. So you have to really be brave to go in with $10, $15, and you try to make it. So the only thing to do with this robot was to get a trend, to analyze and get a trend. You just have to find the starting point of a trend and the ending point of a trend, irrespective of whatever method you use. There's an upward trend, there's a downward trend, and there's a sideways trend. So how you determine how the upward trend begins and how it ends is entirely up to you. And I think I used some methods. I used divergence to determine a reversal and a beginning of a new trend. So we're using divergence to determine the upward trend, then how that trend ends with divergence. That was one method. The other method was using the Ichimoku, yeah, for the reversal, but the Ichimoku seemed to be very, very tough. But, so people preferred the, the divergence. But at the same time, you can also study and use whatever method feels, the one that works for you. Yeah, so this Braveheart actually had the ability to make all that money. Yeah, it had the ability to do that. After running so many tests, you could see it working. Yeah? But the difficult part was, where the market is at the, where it is at the current moment. That's where the difficult part was. So where it currently is, how do you determine that we're having a new trend, or we're having a, where the trend is ending? So that was a bit tricky. For me, it wasn't really very tricky, but I also realized that the people who I was dealing with had never traded before. Yeah? They'd never done analysis. They'd never used, a few had, but so many had not. And my advice was, get a demo account and try it. You try it for some time. If it works, then you can deposit your money. But, when it works, even for 2 days, then you feel the confidence to put in your account, to put your real account. And, yeah, so there was a lot of transparency there that, this is how the robot works. You test it, you have to look for this point and that point. Yeah, if it is difficult, the market is not something simple. It's not something simple at all. Yeah, so after seeing how much people were really going through, people are going through a lot, trying to make it work. Yeah, so I decided that, this robot, you have to look for the trend. The trend is moving upwards, you have to look for it manually. And, you place you activate the robot to start trading. So I started thinking maybe I could create another robot, an equation, put in some kind of mathematical equation and some patterns that automatically determine the trend. Yeah, so that when you combine Braveheart with this new robot and you put them together, then this one here will determine the trend for Braveheart, and it will start selling when the market is going down, and then it will start buying when the market is going up. Yeah, so I realized another thing at that particular time, that this thing that switches that new robot, the one that switches the entry points, yeah, it is really tough. Yeah, it's really tough to make. It's the whole trouble of making it was too much. Too much. But the beauty about it was that it could run in so many charts, because if you have the entry already determined by Braveheart, and you have the determinant, which is maybe in the Ichimoku or in divergence. With Ichimoku, the success is very good on Japanese charts, maybe because that's where it was actually built. But then with divergence, which is sort of a universal way of analyzing these markets, the success on many other charts was quite good. So, it was a bit, but then there were too many adjustments that needed to be done for every particular chart. Yeah, so all that can properly be explained. Transparency is the best way of, explaining that, this is how these things work. Once you know, then you decide and know how difficult it is, how easy it is. Yeah, so there are many other robots which really, they just work in their own way. There's that thing, there's that robot called Gold Rush. I think I did a preview about it. And that one, it was a robot on gold, XAU USD. And for that robot, I just used the parabolic SAR, only the parabolic SAR and 2 moving averages on a 4-hour chart. And it was relentless. It was relentless on on the whole year. Yeah, that that chart, XAU USD. So the robot was extremely powerful on that chart, and Yeah, it tore through the whole year, just a very simple strategy. When you test it, the results just speak for themselves. You can't discard anything. I can use the stochastic oscillator, and if I test it on Euro USD, if I just use only the stochastic oscillator on Euro USD and it doesn't work, then I will test the same robot on GBP USD, and if it doesn't work, I move to USD JPY. If it doesn't work, I move on to as many charts as all the charts that are available. If only one chart gives me good results, then I start looking at the good points and the bad points, and I start working on it. So you don't really need to have a very, very tough trading strategy in order to succeed. You just need to have a very nice, just need to have something simple that actually works. And the only way to know that something works is not by reading about it, is not by me telling you about it, that this thing works, this works. Even if I speak for the whole year, it might still not work. The only way you can know if something works is if you test it on the market and get good results. That's the only way. There's no other way. So all this testing must be done. And all these systems work on every market. Even our local market, the East African market, the African market, doesn't matter. As long as you have an opening price, a closing price, a high and a low, all these strategies will work, and you can build your own strategy for the market that you're going to trade. You don't have to buy stock and be sluggish for a whole year. You can buy stock when it's going to go up by looking at the statistics and so many things. What is happening in the company will contribute obviously to the stock's movement upwards or downwards. But if the market is very transparent, then you can analyze it technically and you can determine where it is going. And you can put your money there and you'll make your profit. Stock, these stock companies, buying stock, buying shares, can make a lot of money. You can make a very big percentage in a whole year. So if you analyze and you look at these things critically, then you can make a very good decision when you're making your investment. So today we're going to look at, okay, as promised, we're going to look at pivot points. Pivot points are something very, very important in these markets. They provide you with the day's support and resistance. Every day, you have a different set of support areas and resistance areas, which is quite good. They keep on changing based on the price of the previous day. For example, today we shall be looking at the price of Friday, and that will determine all the pivot points for today. So if you don't use pivot points, we're going to go through them here. We're going to first do it in a manual way so that you understand how difficult these things are, how difficult it is to have some, how difficult it is to do things in a way that is sort of analog. So we're going to take, so let's just take a look at, we're going to take a look at one chart. I think, let me use the Euro USD. Okay, that's a very common chart. Let me use a chart which we hardly ever look at, GBP CHF. Okay, so for the pivot points, we use a daily, something like that. So we're going to use a daily chart. This is today's candlestick. So the one which will determine the pivot points of today is this candlestick. This one is Friday's candlestick. That was the 25th of March. Today is the 28th of March. So this candlestick is what is going to determine the pivot points of today. Now, it has a very simple strategy, a very simple calculation. So you always have a central pivot point, the one in the middle. Then you have resistance, areas of resistance and areas of support. So we're going to start by calculating this central pivot point. So there you get the high plus the low plus the close, divide by 3. Now on the chart, the high is up there. It's the highest point. The low is the lowest point. Then the close is it's where the candlestick actually closed. Yeah, I think maybe we can kill two birds with one stone. We can say the bull candle is the green one, the bear candle is the red one, and that is the bird down and bear candle. Okay, so those are the colors that we have. So this one, this green one is upward movement. So upward movement means it opened down there and it's going to close up there. You know, like this one, it opened down and closed up. That's what makes it a bull candle. It has that upward movement. The bear candle is the one that has downward movement, which means it opens up and closes down. So for the central pivot, we're going to get the high, the low, plus the close of yesterday's candlestick, which is that. So, okay, so we're going to get the high, which is that one. Yeah, and then we're going to, yeah, it's going to be something. So this is how you do it. So that is the high. You just copy the price of the high, which is that one. And yeah, you put it into your calculator. That is it, plus the low. So I'm going to drag this one to the lowest point and get its price. Yeah, that is the low. Yes, I'm going to add there. Yeah, so then I'm going to get the close. So because it is a bullish candle, the close is up. Yeah, it opened there and then it closed there. So I'm going to add all those ones. So I'm going to add that plus that. Okay. Then you have that. So all these, the high, the low, and the close, all of them combined, you get that figure, and then you divide it by 3. So you divide it by 3. Oh, sorry. Do I have my memory? That is terrible. So we're going to do this again. Yeah. So if you've done sciences in the past, you know how it is. You know, once you make that's a small error, you have to repeat. So that plus that with less talking makes it a little bit faster. Okay, plus that plus the third one, which is that one, horizontal. Okay, yeah, plus that equals that. Divide by 3. So that becomes our pivot. So I'm going to copy that from the calculator and I'm going to paste it there. Okay, so that becomes our pivot. So I'm going to give the pivot a very different color, make it a little bit thick. Then maybe I'll give it the color pale green, magenta. Okay, magenta. So that's the pivot point. Yeah, I've also used that color for a very good reason. You will see later on. So magenta is the pivot. So we've calculated the day's pivot. So this line serves as both support and resistance. Yeah, so we're going to now just calculate 2 other lines. We're going to get the resistance 1, which is 2 times the pivot point minus the low. Yeah, minus the low point. So we're going to get the pivot point, which I think is already there. Pivot point times 2 is equivalent to that minus the low point. Okay, let me make this color something else. Let me make it red for support lines. Okay, so the low is that's the value of the low point, and okay, so you're going to do minus the low, and you get that. So that gives us our first. The first resistance is that. So we're going to copy this and just paste it into this line. Okay, so that's the first resistance of the day. Yeah, so I'm going to change this color to blue because resistance lines supposed to be blue. And yeah, so price has already been resisted there. Yeah, that is how strong a pivot point is. It gives you, the price opened. This is the daily candlestick of today of the GBP CHF. So it opened just at the pivot down there. It moved downwards. It was supported by the pivot, and it has moved upwards, and it has been resisted at the first resistance of the day. Yeah, so these levels change every day. Now we're going to get one support level, which is the pivot point times 2 minus the high. Yeah, the high of that previous candlestick. So I'm going to get the pivot point, copy it. Yeah, so we get the pivot there times 2, which is that, and we're going to subtract the high from it. So the high is there, and these are its values. Okay, so we're going to subtract the high from 2 times the pivot point, and okay, that is, so that becomes our support. Yeah, so the support level is right there. Yeah, let me give it the color red. Yeah, so from what you see here, we have our pivot point, which is in magenta. Then we have sky blue for the first resistance of the day, which, the market has moved in that direction. If the market moves in the opposite direction, our support level is that one. So that's for the GBP CHF. So sometimes when you're analyzing your charts using these pivot points, you'll have to check every other chart. So this is GBP CHF. If you go to Euro USD or Euro GBP, you'll have to do the same calculations because the values are quite different. So you have to do different calculations for every chart. Yeah, now that's where doing a multi-chart analysis becomes a problem, because every time you're trading, you need to know your daily pivot points. You need to know your daily support and resistance points, and the way to calculate them is what we have just done. And we've just got one resistance and one support. And there are so many that are still left. You have to get these other 2 and those other 2, which will take quite some time. So, yeah, so what I wanted to show you today, what we're going to start using now every day, are pivot points. And I'm not going to calculate them for every chart because there are so many charts there. And if I start putting in these pivot points, I might have to wake up at midnight when the candlestick has happened for yesterday, and then I start calculating them so that we get them here. But that is not effective at all. So moving back to this GBP CHF chart, I have an indicator here. So for those who don't love indicators, you might love this one. It's called the pivot point. So I'm just going to drag it into the chart, and so we have so many colors there: visualization, input, line thickness. Let me make the lines a bit thick. Let me make them number 4. To make them very thick. So we have the pivot points there. If we move into a 4-hour chart, let me zoom this out a little bit. Okay, let me first let me remove the grid and period separators so that it makes a little bit more sense. Let me delete the pivot points as well. Okay, so in the 4-hour chart, this is what I have drawn. These are the lines, the pivot points we had. You can see price. It actually that is 28th. Okay, so price actually opened somewhere on this candlestick, this one here. It has been moving upwards, so it opened at the pivot and it closed up there. So I'm going to open this SDX the pivot points, I'm going to make the line thickness 4 and place them there. So they will show you that this is the first pivot. That is the pivot point, exactly where we drew the other line. And this was the first support level where this other line is. So the pivot shows you the beginning of the day. That is what that marker is right there. And then it shows you the, okay, that is the marker. And then it shows you the candlesticks of today. And it is calculated using the previous day's market. Yeah, so that is how simple it is. So with this indicator, it has calculated support level 1, support level 2, support level 3. Automatically, it has also calculated resistance level 1, resistance level 2, and resistance number 3. And the medium points as well. The middle support in between support 1 and the pivot, the medium support in between support 2 and support 1, so the medium areas there. And you can see the resistance lines are a bit more spread out than the support lines. So I'm going to delete my lines, which is this big one there, the magenta, and this red. Yeah, so when I delete them, they fall in place. So this is an easier way of getting your daily pivot points. So looking at the GBP CHF, only by looking at these pivot points, we have a clear break right there. Let me use a 1 hour chart, which might be a little bit better. So price was clearly resisted there at that medium resistance 1 until there was a break there, and so price moved to that resistance 1 level. And so previously the market was below today's pivot, and it moved upwards, and market opened above the pivot, and we've had that upward movement. Just by using the pivot points, price has opened above the pivot, and we're looking to break this medium resistance to move to this first resistance level, which was quite successful. So that is the GBP CHF. Euro USD, you can see pivot points automatically calculated there. So for the Euro USD, price opened below the pivot, somewhere there at the medium support level. And it broke through the support level 1 and was perfectly supported at that medium support 2. And we are just having a break right now. So the next candlestick might break through support 2 and probably move below. So that's the Euro USD. USD JPY. It has, today's market alone, has hit all the 3 resistance levels. It has broken all the levels and moved upwards. So that one, if you look at the pivots, it was moving upwards. This is the middle point, the pivot, which is it's like the medium point. When price moves above that level, then you're likely to have upward movement. If it moves below this level, you're likely to have downward movement the whole day. So for this USD JPY, the upward movement is continuing. GBP USD, this one here was a little bit, okay, let me get that right. So this one opened below the pivot point, and there was some small resistance at that pivot point when price tried to move up. Then there was this break of the medium support level 1, and the breaks have continued, but right now it is being supported at that medium support 2. So you can just wait for a break to move downwards. So price is opening below the pivot, give you some kind of a downward trend. Okay, USD CHF, same thing. Price open above the pivot, and we're having that upward movement. Price is now at the medium resistance 3. Australian dollar versus the US dollar. This one is in a range market. In a range market, price opened below the pivot point and moved up to the pivot, was sort of resisted, moved down, was supported at medium support 1, moved up, has been resisted at medium resistance 1. So for this range market today, it's in between medium resistance 1 and medium support 1. And currently it is taking the upper side. of the pivot point. It's above the pivot. Yeah, so that's another interesting one. So USD Canada, yeah, this one opened below the pivot point and has been fighting to break that pivot ever since. Yeah, when you have such charts, you don't really waste any time on them. You just, you give it, you move on to the another one which is promising. Yeah, so Euro JPY, okay, Euro JPY upward movement as well. Yeah, very nice chart. GBP JPY, must be expecting similar movement. Yeah, perfect support at the pivot point and resistance there. One candlestick just tore through the medium resistance 1 and the resistance level 1. Okay, so those are the major pairs. You can look at some exotic pairs. Oh, you can look at some interesting pairs, some charts like gold. Yeah, people love gold so much. I love gold as well. Yeah, not so much, but I also love gold. So gold prices opened just above the pivot. We're facing some kind of support there, and yeah, so that it broke through the pivot, perfect support at support level 1. When it broke it, it has been moving so swiftly downwards. So, okay, the tough chart is silver. People love gold, but silver, Forex traders fear silver. It's like as if Forex traders are werewolves. Werewolves are the ones who they shoot with silver bullets and all that stuff. And some vampires maybe, so shouldn't be afraid of silver. They makes a lot of money as well. Okay, silver opened below the pivot point and it has been moving downwards very well. Respecting all these levels, the support level 2 is the one that has sent prices above. Okay, let's see if that works on Brent crude oil. Yeah, Brent crude oil. Yeah, So the last price was up there, and today it opened at the medium support level 1, and it moved low. It went low and was supported by that support level 1. It moved back upwards and met resistance there, and then it is now being properly supported at this support level 1, which is quite it's quite interesting for Brent crude oil. Yeah, let's put some index charts. Okay, some index charts there. Okay, here they are. The Nasdaq. You can just. So these are universal ways of analyzing. Nasdaq open above, moved below, has been resisted, supported at the medium support 1, and resisted at the pivot, and prices are in there. US 30, that is the Dow Jones. Same thing, open somehow above the pivot, moved below to medium support 1, and is being resisted at the pivot. Yeah, that is quite something. The S&P 500 index, looking at the same kind of pattern, only that this one here, prices are being supported at the pivot point after more support coming from the medium support 1. Yeah, so I think that's the last chart for today. Yeah, so pivot points are calculated by the previous day's high, low, open and close areas. So you have to look at that candlestick. You have to be very critical when you're looking at that previous day's candlestick, and you get those values to calculate your pivot points for the day. Yeah. Now, pivot points are not just an indicator. They are not just support and resistance. These ones are determined by the price itself. So if you love price action so much, it is price action of an entire day determining the support and resistance of the coming day. Yeah, so tomorrow we're going to calculate the pivot points using today's data. Yeah, so those points, they entirely depend on everything that happens the previous day. So whatever happens fundamentally, technically, whatever way, even a sentiment that is within the market, whatever happens will be reflected in tomorrow's pivot points. So that shows you that these ones are not calculated by analysts. You do not make your own analytical tool. These ones are determined by the price itself. It's like price action telling you that tomorrow there's going to be resistance here and there and there. And it's a good tool to use for analysis and to know how far you can go on a certain currency and how low you can go. Yeah? Because sometimes you expect too much profit, and the pivot points, which are normally squeezed together, will show you that volatility might be very small today. Those ones which are spread out will show you that there might be a lot of volatility today. So you add this with so many other types of analysis so that you have a proper price movement for your trading in that particular day. Yeah, so pivot points are very, very useful. They're extremely useful. And they don't only work in the Forex markets. Even the stock charts, if you get stock data for a day, yeah, even if it looks like that, even if it looks like a bar, like nothing happened, something could have happened in those decimal places, maybe 10 decimal places. You could have some price movement there. So you can use that to determine your pivots for the day. Yeah? But if the day is too much, then you can calculate the previous monthly candlestick. Then you will have pivot points for this month. And there you will have a better outlook on how prices are going to move in that chart. So what I've been doing the first thing we did with the calculating is what you can do every week, because you can do that once every week, even a month. You have to do it once every month. But with with the indicator, with that automated system, we're just dragging charts, and the pivot points are coming up automatically, which makes life easier. So automation makes life easier. Imagine if you had to, all these charts we've been looking at, Brent crude, Nasdaq, all those major pairs, Dow Jones, we've been looking at all those charts in a very few minutes. But imagine if we had to calculate every chart's pivot, support, resistance, support to even the medium points. It would have been really rough. Yeah, very, very rough. So having automation, I'm trying to make a good case for automation. Yeah, not because I like robots or whatever, but it makes life better. It makes life a lot better. And if traders start getting onto that and putting a lot of that work of drawing these lines and whatever, then once you reduce on that, then you'll have more time to analyze even more charts. Because you might wake up one day, you start analyzing GBP, USD, you first calculate its pivot points, you put them there, then you look for divergence, and then you look for whatever price action. By the time you're done with it, about 3 hours have passed, and then at the end of those 3 hours, you don't really have a trade, so you have to get another chart and start all over again. And that becomes very tough. But if you have everything automated inside the chart, and you just keep on dragging different charts onto it, then you analyze so many pairs, and so many other different charts. You analyze them in a very few minutes, and the one which has a very, very good possibility of making you some money is the one you will take maybe out of 10 charts. Imagine how much you can do in just 1 hour. Some people spend a whole 3 hours analyzing one chart. But with all these indicators, you can analyze even 50 charts in 1 hour, and then from those 50, you get your best 5, and look at those 5 critically, and then you enter a trade maybe in about 2 or just 1 chart, and that will be a very nice day. Yeah, so I think that's it for today. Thank you for watching. I hope you've enjoyed. Pivot points are no joke. I hope you've enjoyed calculating these things. If you have a calculator there, start calculating, and then you put those levels inside there. Indicators don't really work on mobile phones. So if you're the kind of person who loves your mobile phone and you want to do everything on the phone, then you'll go through the hassle of calculating all these pivot points. Yeah, but that's okay anyway. Yeah, if you have your mobile, if you have your PC or your what, you can get the indicator and put it there, and it will do the work for you. Yeah, it will be very, very, it will make your work a lot easier, and you'll have many more trades in a number of days, and you'll make a lot more profit like that. Yeah, so thank you for watching. Have a good day. Goodbye.